All right, good morning, everyone. Happy Wednesday. Happy Federal Reserve Day. Happy Jerome Powell Day. Let's do a quick sound check, guys. Make sure we are rocking and rolling. And quick look here at the futures. Everything pretty quiet. Everybody patiently waiting for JP. And then yesterday, of course, we had the CPI report. And from there, you got another good push. So here's a scoop. Word on the street is we're a little bit extended. So your S&Ps, your QQQs, your Apples, Netflixes, Nvidias, AMDs, Teslas. Everything is pretty extended here. So be mindful of that going into today. You're long the S&Ps, you're long Google, Microsoft, Nvidia, etc. If Jerome comes out today and rains on the Bulls parade, it would not be the craziest thing from here, guys, to get a pretty good pullback. From another perspective, though, and to me, this is what makes this such an interesting spot. And kind of like the poster child for it would be Netflix. So based on most rules of thumb, and I think a good rule of thumb, once something is trading 2 to 2.5 ATR above that 21 EMA, you would kind of consider it extended. So Netflix is quote unquote extended, back here at 370, 360. Now this trades 440. Right, so point being, extended can turn even to it can turn into even more extended, especially when you have that nested squeeze dynamic. So all the way back here around that 330 level, Netflix prints that daily squeeze, that 2-day squeeze, and that weekly squeeze. So even though things are quote unquote extended up here at 360 to 370, you continue to get that push higher from those squeezes firing to the upside. Daily squeeze fires long. That unleashes its own can of energy. But then in the process here, if you can trigger your 2-day squeeze, you look for a little bit more momentum. And then if you can trigger that weekly squeeze, all right, that nested squeeze dynamic where one time frame inside of another time frame, that can lead to a pretty big push. And an extended stock can turn into an even more extended stock. So the point I'm trying to make here is while everything is extended, and again, would not be the craziest thing to get a decent pullback from here, you have that same nested squeeze dynamic in the S&Ps that you had over there in Netflix. So if we go back a few weeks ago, just like Netflix, the S&Ps have that daily, that 2-day, and that weekly squeeze combo. Based on most rules of thumb, the S&Ps are extended around 4,280, 4,300. All right, you're already about 2 ATR above that 21 EMA. But that daily squeeze fires long. That triggers your 2-day squeeze to fire long, right? And only 2 dots ago. And that, of course, triggered the weekly squeeze to fire to the upside. So to me, it's a really interesting spot where, you're up here at 2 to 3 ATR on a weekly chart, a 2-day chart, a daily chart. It's usually pretty good timing for that reversion to the mean. But where I've seen, where I think we've all seen these things just continue to pump, is when you have those, 2 or 3 or maybe 4 squeezes all at once, all working as advertised. So be mindful of your risk. I think up here at these levels, you want to trade in a fashion where if we do begin to pull back, where you're not getting destroyed. All right, so be conscious of your position sizing, be conscious of how much time till expiration you're giving your trade, be conscious of your strategy selection, but also be conscious of that weekly squeeze. And it will not be dull. And I don't think too much is going to happen here today until we hear from Jerome. So my plan is to take the dog for a few walks and then we'll see what's up here this afternoon and into tomorrow. But for a few setups here, guys. So the only posted trade that I got right now are some calls here in this daily squeeze for a zoom. The word on the street is, if this can close back above 69, our old pal Kathy Woods is going to start to buy it. Not sure if there's any truth behind that, but that's what they're telling me on the streets. But as far as the setup here, we've got our daily bull squeeze. Nested inside of that, we got a nice squeeze here on that 4-hour chart. In the move that I would look for, if we can finally crank out a close above that 69.70, would be for a push back towards that falling 200 SMA, right around that $73 neighborhood. So we got some calls here in the that Zoom squeeze. And then another name that we've been looking at here for a couple of weeks, which actually got a little bit better yesterday, is this Shopify. So one thing we've been looking for here, right, you had a really, really nice push higher after earnings. You get that first back test of that 21 EMA, and you kind of go into consolidation mode. You get your brand new daily squeeze. The only thing missing here as far as the the confirmation that they really want to take that squeeze to the upside was a daily buy signal. Yesterday, with your shift down here in momentum, the MACD getting back above that zero line, that triggered a brand new daily buy signal. So from here, if they can take the top off of this thing, it may be not in a straight shot, but bigger picture, weekly 200 right around that 77 to 78 bucks might not be a bad target. Now the only, and it's not a huge gripe, but the only gripe is I would like more squeezes. So the Netflixes, the S&Ps, a lot of these moves as of late, they had that 2 or 3 or even that 4 squeeze setup. But as it all sits here, it's a pretty good name. Weekly charts bullish, the daily, the 4-hour, and the 2-hour. A close above 66. That thing should be moving and grooving. So I like some Zoom. I like some Shop. And then I did want to show you guys Tesla here because, while I don't think this is necessarily the best spot to, load the boat and get super aggressive, what's happening here on the weekly chart really makes you want to be ready to buy the next flush. What's interesting is the squeezes here in Tesla, they've been pretty short-lived as far as the compression part of the equation. So you'll notice back here, your daily squeeze only printed for 3 dots. So 3 days of compression, then the squeeze fires. And you'll see here off that weekly chart, you're only in that compression for 2 weeks. And now with the push you had here this week, the squeeze officially fires to the upside. So again, not my favorite spot in the world all the way up here to get super, super aggressive. But if we wake up one morning and the market's pulling back a little bit, the Googles, the Netflixes, the Teslas, they're all pulling back a little bit. That pullback, assuming structure holds, and you find some support where you should find some support, that should make for a nice buying opportunity to play for continuation out of that weekly squeeze. And that's a theme that I'm working here on Tesla, the S&Ps, and names like Netflix. Where in a perfect world, you're going to take your max position size all the way back here before that squeeze fires. And most times that's the goal. All right, from the scans, from the squeeze radar, we're trying to catch them inside the squeeze. Sell the puts, buy the calls, then catch the push. But if you miss the first bus, so maybe you missed a little bit of this pump in the S&Ps, maybe you missed a little bit of that pump in Netflix, maybe you missed the easy part of the push here for Tesla. For each of those names, and a few more names here in the market, phase one of the squeeze, the buildup of energy. Phase two of the squeeze is the release of energy. Off of these weekly charts, the S&Ps, Tesla, Netflix, that release of energy is all really brand new. So again, I'm not saying we just continue to go higher in a straight shot from here. But until proven wrong, and we're proven wrong when we pull back, and structure, momentum, everything falls apart. That's when we're proven wrong. But until proven wrong, I got to think Tesla gets a little bit more out of this weekly squeeze than just 1 week of that firing to the upside. Until proven wrong, I have to look at the chart on the S&Ps here. And again, until proven wrong, I got to think we look up in 4, 5, 6+ weeks, and we got a little bit more than just 2 weeks out of that weekly squeeze. All right. If it all works as advertised, that should be the outcome. And then same thing here for a name like Netflix. It's already up $100 and change. Yeah, it's extended. Yeah, it might be a little bit cooked, but you're only 3 weeks into that weekly squeeze here, firing to the upside. So if you wake up one morning, Netflix is down 1, 2, 3%. Don't rush the entry, but be ready for an entry. Figure out where you might want to buy it. Figure out what your trigger for an entry would actually be. But then be ready to take advantage of it. And that's kind of the thinking here for a lot of these names. Netflix, Tesla. Another example here would be Boeing. A couple names here outside of the superstars. Now, Boeing actually hasn't even fired just yet. So in terms of that phase two of the squeeze and release of the energy, look how coiled up Boeing is. Weekly squeeze, 3-day squeeze, and a 2-day squeeze. So you could certainly look at, say, the daily chart. And yeah, from a daily charts perspective, you are a little bit late to the party here. Ideally, you find your daily squeeze, you buy your calls, you sell your puts back here, you catch the first part of that push. But to think the party is over for Boeing, to me, is a little bit silly with all these squeezes still coiled up. All right, so think of the move you just saw from the S&Ps. Think of that move you've seen over the last month or so from Netflix. This is the kind of setup that can lead to that move. Daily squeeze fires. That bad boy starts to go. In the process of that one going, boom, they triggered the 2-day squeeze. Look how good looking that is. 2-day squeeze fires long. That wakes up Big Brother on the 3-day squeeze. Then you got the weekly. So you look for that morning where Boeing's down 1, 2, 3%. You figure out where you want to buy it. You wait for your trigger for the entry. And so long as the structure, so long as momentum, so long as everything continues to lean in the favor of the bulls, you look for that squeeze to do its job. Doing its job would mean 4, 5, 6, 8 weeks down the road, you've gotten some action here similar to the action from Netflix. So Boeing's not a bad pick. And there's a lot of these right now. Lows. Check this puppy out. Weekly squeeze, 3-day squeeze, 2-day squeeze, and a daily squeeze. They've all got the buy signal, but none of them have fired just yet. That all works as advertised. Lowe's is probably setting up here for a nice push. Another good example would be JP Morgan. weekly squeeze, a 2-day squeeze, you got a 2-hour squeeze. I think we've taken a look at Costco a few times. Yeah, there you go. Weekly, 3-day, 2-day, and the 4-hour. So again, guys, the point I'm trying to make, yes, things are extended. And I think a great rule of thumb, anytime we're extended, just be mindful of your risk. Position sizing, time till expiration, strategy selection. Trade in a fashion where if we do continue to go up every day, the money keeps on pouring in. But if we do wake up one morning and the S&Ps are pulling back, which probably makes for a great buying opportunity, just make sure you're not getting your head torn off. The worst thing you can do is you're getting so aggressive up here. S&Ps pull back a little bit. You're taking all kinds of crazy damage on that pullback. When in reality, that pullback, that's where you're looking to get long. Then you catch a continuation higher. Don't be the guy or the gal up here who buys it super aggressively, and then when they can no longer take the pain, they dump it off to the patient trader who's going to buy it down here. The good old exchange. So S&Ps, Netflix, Tesla, all kinds of good stuff shaping up. But that's the message I'm trying to drive home. Anytime we're extended, you're you're one good gust of wind away from a pretty good pullback. At the same time, the bulls have got a whole lot of gas in the tank here. So be mindful of your risk on your longs and be careful shorting it. You got to be able to hold those two ideas at once. All right, the S&Ps are pretty extended here. So I'm going to be mindful of my risk. I'm not going to put on huge position sizes. I'm not going to do, crazy aggressive trades. But at the same time, I'm not going to short it. You never look to short a market just because we're extended. If you're playing that game on Tesla, you probably don't have an account anymore. Tesla's extended at $200. Extended at 210, at 220, at 230, at 240, at 250. And in a few minutes here, we're going to be extended still at 261 and change. So be mindful of your risk, but also be very careful shorting these bad boys. They continue to be a bit feisty. But that's all I got for you guys. So any questions, any charts you want to take a look at, throw them on over. And then I guess we'll all just kind of sit here today and stare at each other until Jerome comes out. Only 5 hours, guys. We only got to wait 5 hours. Oh, Max, yeah, Google. How could I forget? How could I forget the big Goog? Google does come back to an interesting spot here. So got a daily squeeze back here in early May. Squeeze fires to the upside. Huge push. And now for the first time since that squeeze fired back there in May, Google's kind of taking the chill pill. All right, little reversion to the mean. Little consolidation. But with that consolidation, you get your brand new daily squeeze. So now the question is, which way is that daily squeeze more likely to fire? To the upside in the direction of the trend, or to the downside? And it's kind of a tough call right now. Structure is bullish. The trend is bullish. The sector, the space is bullish. But back here, what causes that daily squeeze to fire to the upside are all the buy signals coming in from the ground up. In that squeeze, your 5-minute, your 15-minute, the 30-minute, the hourly, if they flip bullish, right, structure shapes up, momentum shapes up, that's what goes on to trigger that daily squeeze to fire to the upside. You don't just magically get that huge push. So as far as an entry here, it's kind of the only thing that I'm missing. As far as a trigger to kind of propel that squeeze higher, it's all pretty neutral for now. So a 5-minute, a 15-minute, a 30-minute buy signal, some kind of trigger here in that daily squeeze. That's where I would jump in and get long. Where I've really got to be patient, though, you get a little bit of a divergence here. So MACD broke under the 0 line. So momentum breaks negative. And price is still trying to go higher. So now if those lower time frames all go bullish, we get a nice little push going. Momentum can curl right back above 0. In the absence of lower time frame buy signals to give you that positive shift, Google might just keep on squeezing. But I do like it eventually for a push towards 130. But that's what you got to be mindful of. Google's setting up here nicely. QQQ, on the other hand, we're 200 miles above support. So Google might be in a nice spot here. But what are the chances of Google holding up at that 21? Just trading sideways. If from here, QQQ does pull back, maybe even the 350, you probably got a little bit of a flush in Google. So things to be mindful of. Dave, that's just the MACD. The MACD using the 24-52-9 settings. Now, if you're referring to the visual of it, for the visual aspect, on the indicator settings, you would want to go to the diff. And for the diff, I've got my MACD drawn out as a line. So traditionally, it'll look like this. Kind of like the TTM squeeze. So if that's what you're referring to, the visual of it, go to the settings, go to diff, and draw it as a line. If that's what you're referring to. Hey, what's up, Russ? Russ has got some A net. No real problems here. Yeah, weekly chart looks good. I'm just not seeing too much for a fresh entry. If we came into today with a 15-minute, a 30-minute, an hourly squeeze, that we can work with. If we're back here at that daily 21, we got a daily squeeze. To me, the squeeze always makes carving out an entry a little bit easier. So structure is good, momentum is good, the signals are good. I probably just have to find a spot to work my entry. But all in all, here structure is pretty good. And the futures look like the futures ahead of the Fed. They're gonna go left. They gonna go right. And collectively we'll go nowhere. Until the big man jumps on the mic. Franklin, so the big 3 squeeze is something that I'm working on for now. And the goal here eventually is to get it pushed out to all of you that have the indicator. So I'm plugging away at that, my friend. I'm plugging away at the big 3 squeeze and the labels over here. So I do want to get that out to you as soon as possible. That way, when y'all are at your desk and you see that little magenta, that magenta 5-minute, you got that bear squeeze setting up. Come on now. And there she blows. Take a quick look here at target. Not much of a recovery here just yet, huh? Wow. Wow. Yeah, this thing was kind of toast when they took out 150. A nasty combo, too. Daily squeeze, daily sell signal, right at key support. They just punch through that thing. So what to do with it now? So if we look at the inverse, so if we look at minus target, minus TGT, that'll flip the current chart upside down. So on the inverse chart, everything looks really bullish here. But kind of the same way you got Tesla, Nvidia, Microsoft, etc. It's a little bit cooked. Doesn't mean it falls apart here, but chances are the initial part of that push, like the easy part of this push, probably already happened. So from here, I think you look for a pullback. Then you try to get long. So that's of course on the inverse chart. It'd be the same thing, just the opposite on the actual TGT chart. Daily squeeze already fired short. The weekly squeeze already fired short. Now, this thing does look really bearish. But to me, I would kind of feel like I'm at a point where, all right, if I wanted to short target, I probably should have been paying attention back there. Try to be short for the easy part of the push. Now, target's not exploding here. Right, you're not getting a huge short squeeze. But if you're still holding your puts, you're not getting too much more traction. Right, easy part of the move, and then a little bit of chop. So I think it would be try to short it on a strong rally. Just as far as playing the current picture here off that daily chart, and then at the same time getting long target here. Like, okay, we're oversold. We're oversold, so we must be due for a big bounce. Well, that's like trying to get short Tesla. Just because Tesla's extended. Tesla was extended at $200. This thing keeps its act up. It's going to be at $300 pretty soon. You never get long just because something is oversold. Target was oversold when it broke 150. It's oversold at 145, 140, 135, 125. If you want to take a shot for a long to catch that bounce, or you want to try to play for that reversion to the mean rally, do that when your indicators actually suggest, yeah, we might be setting up here for a nice bounce. But you never look to do that, I think, just because you're oversold. Like Tesla. Tesla has given absolutely zero sell signals throughout the course of this whole push. So if there hasn't been a short here on Tesla based on a high probability short setup, no sell signals, no bear squeezes. So in a way, Target is kind of the inverse of Tesla. If that makes any sense at all. Max, to me, the rule of thumb, and again, guys, I can't stress enough, oversold, overbought, that's just context. I think the last thing we ever want to do is go put on a trade just because we're overbought or oversold. To me, it's just context. When we're 2 to 3 average true range moves above that 21 EMA, in my book, that's where I consider something extended. It's just context, though. I'm not going to short it. I've continued to play Tesla long here, right? Even though we're quote unquote extended. The context is I'm changing up my aggressiveness. I'm going to put on much bigger position sizes, much more aggressive trades back here. And then once things hit that overbought threshold, hey, indicator still bullish. I'll keep on playing it to the upside. But I'm going to use smaller positions. I'm playing with profits. So to me, what makes Target oversold is just the fact you're that far away from that 21 EMA. But does not mean I would get long the Target just yet. All right, guys, one more here, and then I will let you go. Exxon Mobil. I don't see too much I would do with Exxon for now. We have our daily squeeze. The signals do lean a little bit more bearish. 30-minute, 15-minute, 5-minute sell signal. But I don't really see is the clearest short. So frankly, probably one I wouldn't do too much with for now. I'm still kind of waiting on proof that things outside of the semiconductors and technology can actually get any traction to the upside. The J.P. Morgans, the healthcare stocks, the energy names. I am waiting on proof. You are seeing a little bit more breadth this week, though. Boeing's made a nice move. That's finally kind of waking up here. Costco's had a nice move. So a few of these names are starting to shape up a little bit. But all right, y'all, I'm going to let you go here. As always, I appreciate your time this morning. I wish you all the best of luck. And again, just to kind of recap the message here. Be able to hold those two ideas in your head at once. All right, the first thing is just the acknowledgement of the fact we're a little bit overbought here. Then you want to acknowledge the fact that overbought on its own is never a recipe for a pullback. And what you really want to acknowledge here is that weekly squeeze that just fired long last week. So until proven wrong, I'm thinking you got a lot more gas in the tank there. But all right, guys and gals, hope you all have a great day. Wish you all the best of luck, and I'll talk to you soon. Adios.